Hello and welcome to On the Record. I'm your host, Marie Kato. Poland has been in the limelight recently because of an intense campaigning and election period. But not only. Poland has also attracted attention on account of its economic prowess. Off the record, Poland faces several challenges that should be addressed with vision and strategy. On the record today, we're going to look at Poland from a more economic angle. We'll be joined by Magdalena Polan, Head of Emerging Markets and Macro Research at PGIM Fixed Income. But first, let's lay the groundwork with this feature report.
Poland's post-1989 transformation is one of Europe's most striking economic turnarounds. From the wreckage of communism, the country rebuilt itself into the EU's fastest-growing large economy, as GDP has jumped from just $67 billion to nearly $900 billion. Once on the periphery, Poland now plays in the economic big leagues. Exports are booming, investment is strong, and its private sector competes confidently across the continent. It was the only EU country to dodge recession during the global financial crisis, and it rebounded swiftly after the pandemic. GDP per capita has climbed to 80% of the EU average. The European Commission says Poland will lead EU growth in 2025 and 2026. And if current trends hold, the IMF says it could overtake countries like Japan, Israel or Spain before the end of the decade. Yet beneath this success story lie mounting challenges. The population is shrinking. The number of working-age Poles has been falling since 2012, and there are now more seniors than children. Poland works hard, but still less efficiently than the West. Some factories here need 3 times the staff to produce what one in Germany does. Public finances are also under pressure. The deficit is growing, debt is climbing, and the costs of social programs, defence and post-pandemic recovery are starting to bite. The recent presidential election has deepened concerns about policy paralysis. Analysts warn the new president could block reforms and increase populist fiscal measures ahead of future elections. This gridlock comes precisely when Poland needs bold structural reforms. Still, the fundamentals remain solid. Billions in EU funds are flowing in. The domestic market is strong, and Poland's location between Western Europe and a rebuilding Ukraine gives it a unique strategic edge. Compared to sluggish economies like Italy, Poland is still moving forward at full speed. But staying on course will take more than momentum.
And now we are joined by Magdalena Polan, Head of Emerging Markets Macro Research at PGIM Fixed Income. Thank you so much for joining us today.
Thanks. Happy to be back.
So Poland has worked hard and achieved spectacular success in the last 30 years. Poland's Prime Minister Donald Tusk put it nicely in a quote the other day by saying that Poland's GDP per capita has caught up with Japan. Iran lags behind, and that one of the key factors behind it is democracy. Poland chose democracy, whereas Iran has chosen authoritarianism. What are your thoughts on that?
Well, let's start with economics and statistics. And indeed, when we look at the Polish GDP per capita adjusted for the cost of living, because that's very important, indeed, Poland has caught up with Japan, which is an achievement that was difficult to imagine even 10 years ago and not even in 1990 when the transformation started.
Essentially, the success of the last 25 years has been a lot of hard work. Obviously, a lot of countries and a lot of institutions have helped Poland, but Poland has worked very hard as well. In your opinion, is Poland going to springboard with this success into the next decade or the long-term future, or does Poland actually need to start looking at different growth engines?
I think that's a very important question, not only for Poland, but for the rest of this region and Europe as a whole. Because what got Poland and Central Europe here is not going to get it to the next step. We talk now about Poland and Central Eastern Europe as high-income economies. They have managed to successfully overcome the so-called middle-income trap, but what will get these countries, and Poland specifically, to the high income and sustain this high income level will be very different. Hard work, definitely, but smarter work. As you said earlier, Poland is facing demographic issues. That's the same for Europe. And it will need not only to work really hard, but to work smarter and assure that this hard work, smarter work productivity is spread around the country. And it comes from three key areas. One is government policy, two is the private sector, and third is really the social attitude and that connection between private and public.
Absolutely, and all of the things that you've just mentioned now actually turn us to my next question, which is the political situation. While everything is relatively calm, I suppose, nothing hugely dramatic has happened. We have faced the presidential elections. The campaigning period was very tense. The voting, the last 2 weeks of the voting was also quite interesting. And I wanted to ask, to what extent do you think that the political situation will actually play a role in approaching this next stage?
That's a very important question, because Poland is really right now in the last stage of having access to very high funds from the EU. From the next budget or the budgetary perspective, Poland may actually become a net payer into the EU. It's obviously the cost of its own success, but the country still has the opportunity to use not only the Cohesion Fund, but also the various Next Gen EU, Repower EU funds. And for that, you need one, strategic planning, but also continuity across governments and coordination of policies. So here where the political disagreements can really come into force. Not only to mention that Poland is still in dispute with the EU over the rule of law, and for that the reforms of the judiciary system are very important, and obviously a delay to that was stemming from the fact that there was not much agreement between the current government and the previous president.
And in terms of, obviously you speak probably from the point of view of an economist, but in your professional capacity, how do you view the Polish market at the moment?
Poland looks very good when we look at it from the pure investor perspective, being a fixed income investor that buys bonds or currency, but also when we talk to other investors who would like to buy real assets. It's a vibrant economy with still untapped potential to still grow. And the last, let's say, couple of years, when you had either more controversial policies or that difficult cohabitation between the current government and the outgoing president, actually the economy has done well. So that means that the impact of politics has been relatively limited when it comes to the downside, but obviously you might have seen even better upside for the country.
So things are looking positive regardless of everything that is happening domestically in the country.
Yes, so when we look at the political scenarios, for the next year or 2 years, the macro outcomes under different scenarios look good. But this is despite politics. This is mostly because of the acceleration in the use of the EU funds, especially from the Next Gen EU Resilience Recovery Facility, but also a recovery in the investment cycle, which suffered during the start of the Russian aggression on Ukraine and the spike in energy prices. We see some recovery of that. Also, consumer demand has rebounded, mostly because real wages have increased. So for the next year or two, there will be a very strong momentum for the country. But as we discussed just earlier, to sustain that strong momentum for the next 5 years, 10 years, more is needed, and especially addressing the demographic challenges, but also the investment environment for the domestic companies, for foreign investors, but especially for domestic companies, so that they can grow without relying on foreign capital, and they could generate higher productivity growth through a variety of measures, but independently of what's happening in the political cycle and what's happening in the global financial cycle. So the country becomes more independent from the global capital flows.
So there's absolutely no way that Poland can rest on its laurels. And there are solid expectations as to what can happen or should happen with during the next decade if we want to see similar results when it comes to GDP. But there are also concerns as to whether this can be realistic and whether it can actually maintain this sort of pace, momentum, as you said. But as we saw during these last elections, there is definite division within the country, within the government, and I wanted to ask, some people feel very optimistic, others are feeling quite the opposite. And I wanted to ask, because of this division, what is at risk? What is at stake?
Well, I think from the perspective of sustaining high growth, and for me as an economist and also investors, it's that battle at the top that may be crippling towards, say, budget discussions or stability of policies or programs or approach towards, say, long-term energy transformation in the country or building of the new power grid. I'm talking about power grid because actually one of these constraints for Poland, but also other countries in this region, one is energy independence, so say away from Russian gas.
Stability.
But the other one is really actually having stability, having a network, having supplies that will attract factories, that will attract companies, that may attract computer power, because all of this needs energy. So yes, we need people, but we also need energy, and an investment like a nuclear power plant or building of a grid or building offshore wind supplies takes years. It doesn't take one budget cycle or one political cycle.
Like you said, offshore wind farms, we have the high-speed rail, the nuclear power plants. These are all things that the government is very fixated on in a positive sense, because these are very high priorities. But once those are built, what comes next?
I think we should focus even not what comes next. We should focus on what's happening in the meantime as they're constructed, because it's important to also use this as an opportunity for tech and knowledge transfer. We don't really have much nuclear knowledge in Poland. The same applies to building these dispersed energy systems, the new grid. This should be used as an opportunity to train people. We know that countries that are in a similar project or are implementing similar projects, let's say transformation projects like in Saudi Arabia, they are using this to train their own people to gain that knowledge. We've had that already here and other countries in the region through foreign direct investments and the spillover of the knowledge, spillover of the quality, and that should be also the lesson for Poland and the rest of Central Europe.
Are you suggesting that if things happen in parallel while these mega projects are ongoing, that this might actually sustain the momentum for Poland, and that after these projects are completed, that the momentum will keep going, that the expertise will have developed, and that Poland will be able to move on to other things?
That's the positive scenario, and that's what this should ideally look like. Because when you think about constraints to further growth, or maybe impediments to further growth, not coming from the financial markets, but let's say from the independent institutions like the IMF and the OECD that assess Polish economy. These are the issues. It's the lack of productivity growth throughout larger parts of the economy. So large exporting economies are growing fast. They have high productivity growth. The rest of the economy needs that. The other one is the transfer to different technologies. Not anymore cars, not anymore car parts, not anymore relying on a cheaper labor, but rather more high-tech industries. This is what took various economies higher up. Even as they reached the high income level, they successfully stayed there. When you have countries like Switzerland or Finland or South Korea and other countries, or Taiwan, it was that constant progress on the technological chain that kept them moving, because the competition is there. It's very hard to compete against large economies that have cheaper labor. The same place where Poland used to be 25, 30 years ago. They will outcompete Europe in terms of costs. So the way to stay on this higher growth path, to stay also relevant in terms of economic might, is to really constantly run ahead.
Poland's post-1990 growth was driven largely by capital accumulation, EU integration and FDI. What about the near future? Because essentially Poland has integrated into the EU and the problem is that Poland is actually struggling when it comes to private investment, despite all the encouragement that has been especially been voiced this year, left, right and centre. How do we get that private investment going?
That's a very interesting question, because when you compare the rate of private investment to GDP across a variety of countries and then compare that with actual GDP growth, it looks surprisingly low in Poland, and yet growth has been sustained. So the question is whether this investment is actually appropriately measured. Maybe we're missing something. But yes, so the question really will be where investment is going. Is it going really only into structures, or is it going into new technology, automation, research and development? And that can be actually even more productive, because from point of view of just the capital outlays that you have to spend on people and their productivity, this may be actually smaller, but could generate much higher productivity growth, especially for smaller, medium-sized enterprises where efficiency is still lagging. So digitalization, but also investment in the digitalization of the state, of the various services, the quality of service, accounting, financial services, financial management within companies. This is not very expensive, but could get the middle or smaller companies to a higher level and also help close the productivity gap with the largest companies.
That's very interesting that you mentioned that it might be measured incorrectly, because there's been a lot of concern that this level of investment is subpar. So do you think that it's actually measured incorrectly?
So that's because that's the puzzle that we face. Whenever we look at various countries, the rate of investment is always higher than in Poland.
Absolutely.
And yet when we look at the Polish economy, and productivity growth and growth per se is higher. Therefore, either there is a mystery of Polish productivity that we don't measure, because at the same time we know that smaller, medium companies are not as productive, or we don't adequately capture something in the statistics. So I think we do still have an issue that there's probably lack of sufficient investment, but that investment will have to go somewhere else than it used to go. So again, what got the country here will not get it to the next step of actually being that like Finland, being like South Korea, being like Switzerland, which also would then help it accumulate capital, accumulate wealth, and become much less independent from the swings in the global economy.
Very interesting. Economic policy, this is a topic that has evoked a lot of discussion recently, especially with the confidence vote that happened very recently. It's inadvertently been linked to the current coalition government. It's caused a lot of division. What kind of tweaks or significant changes do you think need to be made in order to boost that economic policy that is in place at the moment?
I think we're touching here upon something very important, is that the role of the government in the past and the role of the government now in this acceleration and sustaining phase of high growth is different. So while in the past Poland used to attract a lot of capital through having cheaper labor force, but educated labor force, and the government was involved in a slightly different way, I think now it's shifting to a situation in which you have both this government as the regulatory power, as the one that creates the good environment, but also the one that has to start thinking about more strategic direction, strategic investment, has to take into account shifts in the global economy. You cannot just let this very hungry economy run and attract all this capital and create growth, but actually become this government that thinks more in terms of geopolitics, medium-term impacts, medium-term allocation of capital, industrial policy. And as I said earlier, that also requires continuity across various political cycles, which may be difficult.
Do you think that the priority is now to ensure that there is peaceful or effective cohabitation between the president-elect's chancellery and the coalition government, or just to ensure that there is sustained growth, ideally so that there is boosted economic growth? What is the priority?
Well, from perspective of an investor, ideal environment would be peaceful cohabitation as much as possible and continuation of policies. From my economist lens, I think the priorities would be very much similar. Maybe with a little bit more focus on these medium-term policies. And I guess for the government, the perspectives are slightly shorter term because elections are 2.5 years away. And there is also next budget that has to be approved. And there are all the different social pressures coming in, plus the defense spending. We have to remember that Poland is not a bridge country. It could be a bridge country, but unfortunately it's a buffer country as well. And that puts a lot of pressure on policy priorities because those immediate policy priorities, security, hybrid war, refugees, that is very close and knocking, as opposed to the luxury of being somewhere further away and thinking in these longer term perspectives. But I think another thing would be also from my perspective as an investor is to use this opportunity as another growth opportunity because it doesn't happen continuously, it comes in spurs. So using the opportunity of high investment in the defense sector, using that as another area where Poland could develop expertise, allowing for this ecosystem of military-linked tech to develop, which then can be used in civilian applications. We've seen a lot of examples like that. That's an opportunity that will be very valuable for the country and the region. But it again requires thinking about it, as in using the opportunity wisely. And I think that's happening because talking to the investors here, companies here, I hear that they definitely want to use that, but it may need that helping hand of extra capital that is not purely market-driven, but is more of an industrial policy type of support.
I must take this opportunity to ask you about Romania. Obviously, it's in our region and we also observe what is happening there. Romania is in a tricky situation. Obviously, the elections took a little while to settle. Obviously, they face a number of challenges. What would you consider the most pressing challenges and what would you think are the immediate solutions in an ideal scenario for them?
So Romania is almost like a focal point of many challenges for Europe. One is the deep political polarization, so the division of views and disagreements in the country, and the legitimacy of the political system. Two is fiscal. So Romanian deficit reached 9.3% last year, and there's not been much growth to show for all this money spent. So Romania has to consolidate public finances, but consolidating towards, let's say, the EU goal of 3% is a huge challenge from the level of 9.3% last year. So it has to do it steadily, while at the same time assuring that the economy is progressing and the country is able to utilize all the EU funds and not alienating large groups of society while also maintaining defense spending. So they are in a difficult situation. However, Romania is in a slightly earlier stage of convergence. It still has potential to grow at higher rates. It is a cheaper, but not that much cheaper, but cheaper destination for foreign direct investment. So it still has the same opportunities as Poland, Czech Republic, other countries had, let's say, up to 10 years ago. But the country needs a lot of work and a political agreement across parties. Because first, they actually have to form a government. And it's going to be probably a 3-party or 4-party coalition and a president who's an independent. So that means you have multiple bodies trying to agree and coordinate. However, I think there is lots of support from the EU. There is lots of policy direction coming from other sources. I think the politicians, policymakers know what they should do. The question is, will they actually deliver? And will they push the limits of their political capital and political support to deliver after years of quite generous public spending?
Absolutely. Magdalena Polan, it's been absolutely fascinating having you with us. Thank you so much for your insight.
Thank you. Great to be back here.
And that brings us to the end of this episode of On the Record. Make sure that you stay with us and make sure that you join us for more exclusive interviews on TVP World. Many thanks. I was your host, Marie Kato. Goodbye.